All right, folks. Welcome to this live stream. I wanted to live stream earlier, but unfortunately, I was trying to find Messin. Jeez, I'm trying to turn that down. I was trying to find Messin. We were stuck in France. So we were out here. We were gem hunting. We were in the caves, in the caverns, looking for gems, and we found quite a few. And so now that Bitcoin's looking like it doesn't want to immediately collapse into nothingness, buying some gems does seem appealing. So folks, in today's live stream, we're going to be going through some very, very interesting TA with Bitcoin, with Ethereum. I want to talk about Kusama, Parachain auctions. I want to talk about some potential buy the dip opportunities. I want to talk about the risk. I want to talk about the reward. I want to talk about a lot of stuff. So folks, if you like the sound of that, do me a favor, like, subscribe, comment, share, and hit that bell icon to be notified of new uploads. Ben Adam, I think you're pretty much I think you're an OG watcher of the channel, man. Welcome. You're saying first. There's a $3,400 CME gap. We have to fill it. Yeah, guys. So the one concerning thing about Bitcoin pumping on the weekends is that we form a CME gap. So essentially, for those who don't know, there's some futures trading that goes on with Bitcoin. Those future tradings do not go on the weekend. So whenever, sorry, I'm having a bit of audio. Just give me a second. Hold on. Give me a sec here. Okay, that should be better. I can hear myself now. So, guys, whenever Bitcoin pumps on the weekends, there is a gap that forms with these futures trading, which is typically no bueno, because typically what happens is that the market comes back down to fill those gaps. Not always. And a lot of people do place a lot of importance on those CME gaps, because we do usually fill those CME gaps, but not always. And by the way, also, a breakout followed by a retest is not at all crazy. In fact, it's extremely commonplace. Guys, breakouts and then retests of the breakouts are extremely common. So even if we break out here and then come Monday, we come right back down to retest the breakout point and hold it as support, it's not the end of the world. I see Tony Lou saying, what altcoins are you buying? Well, I have like a dozen or so over here that I'm very excited to start talking about. So maybe we'll get into that later on in the live stream. First, I want to get Bitcoin out of the way. I want to talk about Ethereum, Kusama, the Parachain auctions. There's actually a shit ton to talk about in this live stream. I want to make this one short, but it's probably not going to end up being short because there's so much I want to talk about here. So what are you guys seeing here? Short squeeze. Ooh, guys, yeah, because, oh, by the way, we just made a higher high. We made a higher high. Congratulations, everyone. The downtrend has been broken, or at the very least, the price structure has been broken. And, guys, look, while I can get excited like I get excited about this stuff, right? I enjoy talking about this. This is my passion, right? At the same time, we need to be leveled and bring things back down to reality. So, folks, when I say something like we made a higher high and we broke the downtrend, well, that is true. I think it's more accurate to say is we broke the structure. So what were we doing this entire time? Oh, guys, there's so much I want to talk about. Okay, so we were forming lower highs and lower lows, which is very no bueno. But for the first goddamn time, oh my god, my mic. Hold on, folks. Give me a second. This I'm having mic. Okay, that's better. So, folks, for the first time all throughout our correction, we have put in our first higher high. This is a very big deal, and there's I want to show you guys something that I don't see anyone else talking about, which is extremely important for Bitcoin. I think this is the thing we need to look out for. So let's zoom out here for a second, guys. This is super important. I've been saying for pretty much months at this point how this daily RSI for Bitcoin was extremely relevant because we were making higher highs in price action while making lower highs in RSI. That is classic bearish divergence. That is whenever we see this, higher highs but lower highs in RSI, the uptrend is running out of strength. And so eventually the uptrend just stops because we keep running out of strength. But what have we been seeing in the short term? If we kind of zoom in, what are we seeing? In this case, we're seeing lower highs in price action, but each of those lower highs in price action coincide with a higher high in RSI, which is bullish divergence. Classic textbook bullish divergence. As soon as you see lower highs in price action paired with higher highs in RSI, that's bullish divergence. And so I think that's why we're starting to get maybe what could be the beginning of the relief rally. At the very least, we made a higher high. So we have temporarily broken the micro short-term downtrend. At the very least, we've changed the structure of the pattern because we've been forming lower highs. First higher high we bought in. So guys, look how significant this was. The fact that we put in these higher highs in price action, but lower highs in RSI, eventually we broke down. And what are we seeing now, guys? The exact inverse. You can do this with the upside and the downside. Lower highs in price action coinciding with higher highs in RSI. It's telling us that the upward direction is gathering strength, the relative strength index. It's telling us that the down movement is running out of strength. You pair that with a bullish crossover on the daily MACD, and then you have a confluence of reasons to think that a relief rally is pretty reasonable and realistic, in my opinion. You always want a confluence of reasons. And by the way, we have never been this oversold on the daily MACD ever. This is extremely significant because the further on an extreme we are and we see divergence, the more meaningful that divergence is. And so while people say, oh, they're lagging indicators, yeah, the MACD and RSI, they are lagging indicators. But when you have it on such a high time frame like this, and we're at an inflection point, whenever we're at an inflection point, extremely oversold, extremely extended to the downside, and we see bullish divergence, then I think a relief rally is pretty realistic. And we're just starting to see the first signs of that. We're starting to see our first higher high. We broke the bearish price structure. Now, yes, weekend pumps are typically no bueno because when Monday comes, it comes and these future trading platforms open up, they typically bring the price down, although not always. But look, guys, coming back down to retest a breakout. If we do something like this, come back down and retest a breakout, as long as we hold above like 3,600, 3,700, then we could have a further relief rally. Now, I also want to take a second here, and I know this is a very busy chart. There's a lot of stuff going on here, but I want to simplify what we're seeing here, because what we're seeing here is extremely important to take in. Guys, we need to understand that in macro time frames, like when we're looking at several years of price action and when we're looking at a 5-second chart, we do the same thing, which is we have a move, form a base, and then retest the base. Whether we're forming a bullish base or a bearish base, we almost always retest it moving forward. So guys, and I want to really hammer home this point, because I think it's relevant to what's happening with the current price action. But first, let's take a second to actually understand and break down why this is significant and relevant, the forming of bases. So we can see here back in 2017, we had a move upwards. We paused here, came back down, and then once we broke out of this high, that's when we pumped further. But also, what did we do here? Once we broke that previous resistance, we pumped, came back down to retest. And this is a very, very common thing where we form a base, form resistance, break out, come back down to retest it. And isn't it interesting how this area where we found resistance, came back down to retest, formed a base of support and resistance from here to here. This was a price reactive zone. This high and this low formed a reactive zone, a base of support and resistance that later on was extremely significant. This reactive range that we formed with this high and this low, later on, months down the road, was relevant. You can see here how it constantly held its support. And as soon as we broke below our base, a reactive zone that we tested there afterwards, as soon as we broke down below that, we had a massive drop as soon as we broke below our significant base. So what I'm saying here is, what I'm trying to get across here is that we usually form a reactive zone, a base of support / resistance. We later on retest it, and depending what way the retest goes, the price action usually explodes afterwards. If we break down bearishly, we usually do that explosively. If we hold it as support, we usually do that significantly. As we can see here, later on, we retested the same base of support / resistance that we previously established back in November, October 2017. That range was still relevant back in April 2019, several years later. Our pump found resistance on what was previously support. Guys, I'm telling you, this TA shit works. And as soon as we broke above it, We pumped up, came back down to retest, held it as support, and then had a massive pump afterwards. Even here, we can see how when we try to have relief rallies, we're getting rejected off this same zone here. So when we have rejection off the same zone, we're forming a base of resistance in this case. So we always form base of resistance / support and then come back down and retest. And look where we came down to and held support during the 2020 pandemic crash. Exactly this range, which was previously price reactive. We always do this, folks. We form a base, a reactive zone, and then we come back down and retest it. And we held that as support and we pumped afterwards. Even over here, folks, from this range back in May 2018 was still relevant to September 2020. We can see how this rejection here was price reactive all the way in October 2019, February 2020, 08 January, and in September 2020. This zone here created a price reactive resistance zone that held for quite a while. And so we broke above it. See how it was constantly resistance. Here resistance, here resistance, here resistance, here resistance. Broke above it, came back down to retest. As soon as we came back down, held it as support, what happened afterwards? We shot up. And I say all this to bring it back to what's happening in the short term, which is we're at an inflection point because we're testing a base. We're forming a price reactive zone, which we're now testing. And I went through all this just to show you guys the point that these bases are extremely price reactive and extremely significant and extremely important. Because whenever we pump up, come back down to retest, that's our base. Typically, sometimes we'll retest it afterwards. And so what I'm trying to get across here is, as long as we hold the line at 30K and don't make a lower low, then I believe this could have just been a very scary retest of a previously price reactive level in a previous base. We do this shit all the time. We form a base, pump up, come back down to retest it. Form a base, pump up, come back down to retest it. This happens all the time on macro scales and micro scales. And also, guys, just to show you guys what I'm doing in the market and how I'm timing or calling bull market or bear market, I see a lot of people jumping to conclusions. We do not need to jump to conclusions. We need to follow the price action. The price action will tell us what's more and less likely. So there's reasons to be bullish and there's reasons to be bearish. So how do we get clarity? One of the best ways to get clarity is wait for confirmation. A higher high is bullish confirmation. A lower low is bearish confirmation. So over here, when we had this crash and we made a lower low below here, I actually sold a bit of my portfolio extremely begrudgingly because every lower low we make is bearish confirmation and thus makes it more likely that the downward trend can continue. But what did we do? We formed this wedge, we broke down, and the market said, we ain't going down. We pumped back into our wedge, and we're now above it, forming a higher high, signaling bullish confirmation, and at the very least, a breaking of this price structure. Where again, we're constantly forming these lower highs. We just put in our first higher high, still even putting in macro higher lows. And guys, that is the key factor. Higher lows, higher lows, higher lows. Fuck people's feelings, fuck your intuitions, fuck my feelings and intuitions. We need to follow the price structure because whatever happens, higher highs and higher lows makes will clarify what's more likely to happen next. So because there's endless layers of resistance above us, from fibs to EMAs to SMAs to trend lines to clouds to volume, because there's endless resistance above us, we shouldn't be surprised from rejection. Rejection at any point, literally any point above us, should be anticipated. It's honestly not even maybe that helpful to draw resistance zones, just because between EMAs and trends and fibs and clouds and all this bullshit, this would just be a solid box of resistance above us because there's so many layers of resistance. So at any point we should anticipate rejection. That's fine. Rejection is not confirmation that we're entering a bear trend. What is confirmation of the macro bearish trend is lower lows. So as long as we keep putting in, higher lows. Higher lows is what we want to see. As long as we put in higher lows, then the uptrend can continue and we could continue getting rejected. Because again, guys, if we put in higher lows and we keep testing resistance. Well, the more times we test something, we poke a zone, the more likely we are to break through that zone. So see here, we're kind of forming a trend line, and you can draw this several different ways. You can draw this like slightly differently, something like this, or like something like this. You can draw this many different ways. Point being, the more times we test an area, the more likely we are to break through. And so while you can draw this slightly different ways, bottom line is we're trying to have these relief rallies, everyone putting a lower high. So eventually, once you test resistance, you break up. And again, if you pair that with the bullish divergence we're seeing on the daily RSI, and if here, bullish divergence on the daily RSI, not only going from extremely oversold to now making higher highs and higher lows, but you have that paired with price action here, lower highs in price paired with higher highs in RSI. That's bullish divergence, and we have a bullish crossover from the daily MACD. That's a confluence of reasons. So I do think that at this point, a relief rally with Bitcoin is very much realistic. But in terms of what do we need to see, enough bullshit. How do we know if we're in a bull market or if we're in a bear market? It's very clear. If we make a lower low below $30,000, that's confirmation of the bear trend. And in that case, I'm going to be moving into stable coins. If we can get above this red trend line, come back down, retest it, hold it as support, and start to move up, then that's confirmation of the bull market. So again, guys, no need to talk about feelings and intuitions. We need to wait for confirmation. We need to wait for the price action. We should anticipate rejections. The key thing that we need to look out for is to keep putting in these higher lows. As soon as we put in lower lows, that's when I get worried. Lower lows is bearish confirmation. Rejection is not necessarily bearish confirmation, but lower lows is more so bearish confirmation than rejection in my book. So guys, a lower low below 30K makes it vastly more likely that we could be entering an extended bear market, because to me, this does look like a macro head and shoulders. And for those who don't know, the way you kind of do price targets for head and shoulders is, first off, you draw a neckline identifying where your shoulders, the base of your shoulders are. So you see how you kind of form a shoulder here and a head here and a shoulder here, kind of looks like a person. So while you can draw this slightly different ways, ultimately, I think I'm using a lower low below 30K as the inflection point as for breakdown from this head and shoulders. And so the way you kind of do a price target for this is that you draw a line from the top of the head to your neckline to the base. You move that to the breakout point. And so this is how far you could fall. So we could fall, oh my God, all the way down to, this does not make a lot of sense. What is up with this line? We could fall down to negative 4,000. You heard it here, folks. Negative 4,000. Yeah, I don't know what's going on. Anyways, guys, point here is there's a lot of downside potential. So that's why I'm using 30K as the inflection point. Because once we make a lower low below 30K, there's enough evidence leaning more bearish than bullish that I would personally start to lean more towards us, likelier than not, entering an extended bear cycle. But we still haven't done it. So as long as we hold above 30K, there's still light at the end of this tunnel. So 30K is the bearish confirmation. Now, what's the bullish confirmation? How do we know if the bull trend will continue? Again, this red trend line. And just to show you guys why this is so significant, is because, look, back in 2019, when we had kind of our false bull market here, again, if we zoom out, just get a sense of the macro direction. What did we do here in 2019? We put in a peak and then a lower high, just draw a trend line. We came back up to retest it, got rejected, never broke above it, and the bear trend continued. Even in the past cycle, 2017 bear market, what did we do here? If we draw a trend line from the all-time high to the next lower high, just extend that trend line, what did we do? We came back up to retest it, got rejected, and then the bear market continued, and it was confirmation of the bear trend. So, guys, two super clear cases. Draw a trend line from all-time highs to the next lower high, came back up, found rejection, confirmation of the bear trend. Came back up, got rejected, confirmation of the bear trend. What have we not done yet? We have not had a relief rally. We have not gotten confirmation. We've just put in a higher high for the first time. And even if we were entering a bear market, folks, a relief rally, which we've not had, is extremely realistic. Look at this. This was the bear market. This was the 2018 bear market. We didn't just go down in a straight line forever. We went down, relief rally, down, relief rally, down, relief rally. We always have relief rallies, even if we're entering a bear market. And what have we not had? We have not had any substantial relief rally. We're just seeing bullish divergence. So I do think that even if we come back down and retest, again, nothing to be panicked over. It happens all the time. I at some point we'll have that relief rally, retest this region, and waiting to see what way we test this region will tell us what way the bull market is likely to go next. So, folks, that's my rant. Just understand, these wait for the macro confirmation, lower low below 30, above this line. Understand that we always form these bases, come back down and retest. Again, here, this base was constant resistance, broke back up, came down and retest, then exploded. This range is resistance, broke back up, came back to retest it, and then exploded again, and now we're just retesting our base. Happens all the time. So as long as we hold the line here, then we can continue to uptrend. Again, lower lows below 30K constitute a bearish breakdown. So that's what I want to say with that. Again, guys, the daily RSI. Hear me now, quote me later, because when this happens, everybody is going to be talking about this, and I want to let you guys know that because I want to brag. I'm going to brag, and you can brag too once this happens, because once this happens, everyone and their mother is going to be talking about this. The daily goddamn RSI, folks. All throughout this uptrend, we've see how we're making these higher highs and lower highs in RSI. All throughout this bull cycle, we held this line as resistance. But what are we seeing now? We're seeing a little bit of bullish divergence from one of our resistance trend lines. But fuck that. Let's extend this trend line to the max. So let's try and find the ultimate resistance level where if we get above this, then there's no confusion. And there's nothing unclear. Which what I'm trying to say here, guys, is look, we've held this thing throughout the entire cycle as resistance. So as soon as we break above this goddamn thing, as soon as we do something like this, come back down, break above, come back down, retest it, hold it as support, then the uptrend could continue. And whenever we see bullish divergence from this trend line, from this resistance line, that is when Bitcoin is done correcting and ready to explode. Once we see bullish divergence from the resistance that we've held the entire cycle, I think that's a pretty goddamn good indicator of timing when Bitcoin is not only just done dumping, but ready to recover. So folks, if you like, this rant, you got to do me that favor, smash that like button, like, subscribe, comment, share, and hit that bell icon to be notified of uploads. Because guys, we're constantly bringing you gold, and there's so much more I want to talk about. I want to talk about Ethereum, lots of interesting stuff going on there. Cardano, VeChain, Kusama, the Parachain auctions. I have like a dozen things here that I have on my watch list that I'm considering potentially buying the dip on as soon as we get some more confirmation. Because begrudgingly, I'm trying to be intelligent, not just ape into things. It's so weird how you need to like actually have good reason for your actions and not just randomly ape into stuff. So unfortunately, I am trying to practice being responsible. Ugh, boring. So, anyways, guys, I have a list here about a dozen projects that I will buy. Well, I mean, I don't know about will, but it's on my watch list to buy that I will mention to you guys here. But let's read the comments because I've been going on for quite a minute here. Let's see. So Gordon McCommed says, wish I could like this video 10 times. Appreciate that, man. Aw, that's sweet. Thank you. Ellen Abd says, it's a good investment for rich people because they will gain so much, but at the first you have to sign in a cheaper one. I don't know what you're saying, broski, but I like the energy. I have it on good authority from Satoshi Nakamoto that Bitcoin is a good investment. Well, if Satoshi said it, then it must be true. What else are people saying here? Moonstock V6 pre-sale. Yeah, gross, guys. Don't shill that stuff. Can't watch George because Brendan is on. That is a massive compliment. Thank you very much. I like Cryptos R Us. George is pretty sweet. Also, by the way, I don't know if any of you guys watch Cryptos R Us. I watch that guy. I like his stuff. Like, I'm a TA guy. He's like heavy fundamentals. But that's great. I really hate that there's a division between TA and fundamentals because they complement each other. It's not either or. It's not. I hate it when people are like, oh, I only do fundamental analysis or I only do technical analysis. No, the two complement each other. They make each other better. So I have nothing wrong with these fundamentals guys. I like his show, Cryptos R Us. I've learned a lot about him from him. Bottom line is though, I was watching his show the other day and I did a super chat for his show. I don't know if I don't know if you guys watch his show, if you guys have seen this, but there was a comment where he said, George, check out my bybit link. 100x leverage is very safe, guaranteed moon. And I think you found that funny. So I don't know if any of you guys caught that, but if you did, I found that pretty funny. Anyways, let's start taking a look at some important stuff here. So guys, okay, so before I leave Bitcoin, I want to mention 2 or 3 things, which is maybe just one thing. Hash rate. As soon as we see hash rate start to recover, that's bullish confirmation. That's bullish confirmation. And also Bitcoin held on exchanges. This is a giant kind of macro trend confirmation indicator, because all throughout the cycle, while Bitcoin's price was going up, Bitcoin was leaving exchanges. It makes sense. Less supply on exchanges, increasing demand, price goes up. But as the market was getting spooked, there was more and more Bitcoin going onto exchanges, which is increased selling pressure, and it makes sense that we're experiencing a downtrend. But as of recently, we're starting to see a bit of a shift. We're seeing lower highs and we're seeing lower lows, which is telling us Bitcoin is starting to leave exchanges again. Bitcoin is being bought up. So as soon as we see confirmation of this trend, Bitcoin continue to leave exchanges, that would be macro confirmation of the recovery. If we see Bitcoin start to enter exchanges again, then that's a sign that, hey, the market's actually spooked, the market's not buying, the market's ready to sell. So this is very good macro confirmation. And again, anytime anything interesting happens, a new higher high, lower low, whatever we do, we'll let you guys know about it. So that's pretty much all I wanted to say with Bitcoin for the moment here. Let's see what else you guys are saying here. BitBoy does 1000x leverage and never gets wrecked. Yeah, I don't know about that, man. Michael Johnson says, such a great stream. This channel is gold. Love it. You're gold. You're awesome. Thank you. You guys are awesome. So, guys, let's talk about Ethereum here for a second, because Ethereum is doing something pretty interesting. Also, I kind of want to examine kind of like the macro picture with Ethereum to just hammer home the same point that we did with Bitcoin, which is we form these bases, we come down and retest these bases. And these bases, they're inflection points. Because whenever we form a base here, see how this was constant resistance, resistance. As soon as we broke above, we shot up, came back down to retest, and we broke below it. That was pretty much the beginning of the bear market. That's because these bases, these macro bases we form, they're inflection points. Same over here. Support, resistance, resistance, resistance. Broke above, shot up. Came back down to retest the base, broke down from the base, had a substantial correction. So guys, like everywhere you look, whenever we form this macro base, they're extremely reactive and they're extremely relevant. And so over here, we're forming another kind of micro, more short-term base. You can maybe extend this a little bit more, encompass some more daily candles. The bottom line is here, if we go, this is the weekly chart. If we go to the daily chart, might be able to see this a bit better. So here on the daily chart, we're forming this range of resistance where as soon as we broke back up, came back down to retest, held it as support, shot up. And so what are we doing now? We're just coming back down to retest our base. So as long as we hold our base of support, then that's a good sign. If we start to break below our base of support, ooh, that's no good. That's bad news bears. So as long as ETH holds like 1800 to 2000, then we're good. If we start making lower lows, if we lose our base, I mean, you know, what's happened in the past is not a guarantee what could happen in the future. But look what happens when we lose our base. Massive sell-offs. Here lost our base, significant sell-off, lost our base, significant sell-off. So guys, whenever we form these bases, these price reactive zones, they're inflection points. So as long as we hold basically the line, hold above 2000, hold above 1850, then we're holding our base, you know, we could see potential upside. So that's what's going on with Ethereum. Also, guys, I think I've identified what I think are the two most significant EMAs, moving averages, exponential moving averages for Ethereum specifically. One that's good for kind of long-term price action, another one that's good for calling short-term price action. So the one that's good for long-term price action, in my opinion, one of the best ones, because look, there's you know, you could bust out a dozen EMAs on every different time frame, but what's really relevant? I think these are two of some of the arguably most relevant. So this white line is the 200 exponential moving average on the 10-hour. Pump dump, held it as support. Pump dump, held it as support. Market's telling us this is a reactive level. Even here in the short term, we're finding rejection exactly off it. So this is very good EMA for calling macro long-term movements. And then this blue line, this is the 21 exponential moving average on the 6-hour. Great for calling short-term price action. Look at this. As soon as we broke below over here, we constantly held it as resistance all throughout our downtrend. We break above, we shoot up. We go below it, we shoot down. See, broke above it, shoot up, break below it, shoot down. All throughout this major uptrend, we held this EMA as support. As soon as we started to break below it and showed some weakness, that was the beginning of the massive sell-off. Guys, these EMAs are relevant. I'm not just, you know, talking for the sake of talking. The shit is important. The shit works. So look at this. Look how beautiful this is. All throughout the uptrend, we held it as support. And guys, this is one thing I do when trading as well, which is I find an EMA that hugs the entire length of the impulse, and as soon as we start to break below that EMA, it's typically the end of the uptrend. So look, even when we broke down, all throughout the downtrend, held as resistance, break above, relief rally, break below, dump. Guys, this shit works. And so what are we seeing now in the short term? We're above the 21 EMA on the 6 hour, which is good, but we're still below this 200 EMA on the 10 hour. And we're also below this this volume here. Volume's also good as confirmation of support and resistance. So what do we need to see with Ethereum? Well, obviously we need to see higher highs. We need to get above 2,900. We need to get above 3,000. But really we need to get above this white line and this volume. There's layers and layers and layers of resistance above us. There's volume, there's fibs, there's trends, there's whatever. There's layers of resistance. So ultimately it's very clear. We need to see higher highs, higher lows, and we need to make a new higher high above 2,900, above 3,000. Now, while that is the case, it is Bitcoin's market right now. Bitcoin is totally leading the market. So if Bitcoin dumps, ETH will dump. If Bitcoin recovers, ETH will recover. Also, by the way, let's take a look at Bitcoin dominance, because once Bitcoin, if Bitcoin recovers, then alts will temporarily suffer. But the key thing here is temporarily, because over the long term, Bitcoin being healthy is good for altcoins, as we've really seen as of the last couple of weeks here, last month or so. So we're seeing Bitcoin dominance start to rise. So Bitcoin is, again, gaining dominance in the market. So if that trend continues, which excuse me, which if Bitcoin recovers, it will continue. It will temporarily place the dampers on the altcoins. So with Bitcoin dominance, I would anticipate that we retest a previous base. So this Fibonacci extension, 50% lines up exactly at 50%. So I presume that we're likely to come up here, retest this region, and probably come down for new lower lows, because there's more altcoins this cycle than last cycle and more use case. So I would expect that by the end of the cycle, Bitcoin dominance actually making a lower low from the previous cycle. So in terms of timing, when we could see a peak to this cycle, I would personally start to scale out or consider scaling out once we make a lower low in Bitcoin dominance, because I presume that we're likely to do so, again, given that there's more altcoins this cycle than the previous cycle and greater use case for the altcoins than the last time around. So I would expect a relief rally with Bitcoin dominance, and by the end of the cycle, a new lower low. As soon as we make a lower low, it's probably one sign to start maybe thinking about taking some profits, because it could be a cycle top indicator. So that's going on with Bitcoin. Give me 1 second here, folks. So that's what's going on with that. Let's see what Luigi's saying. People, be thankful and smash that effing thumb. Thank you for your share, bro. Helps a lot. You guys are great, and I appreciate all your guys' support. And yes, smash that like button, because the more likes we get, the more likely YouTube is to share the live stream and that kind of good stuff. So definitely smash that like button. So that's what's going on with Bitcoin and Ethereum. Now, there's a bunch I want to talk about here. I want to talk about Cardano, VeChain, Kusama, because guys, the Kusama pair. Okay, so I'll probably talk about Kusama here for a sec, because this is extremely important, especially right now, because one of the biggest catalysts ever of the Polkadot ecosystem, the Kusama ecosystem, is happening as we speak, which is, well, not as we speak, in 2 days, which is Parachain auctions are starting with Kusama. For those who don't know, Parachain auctions are essentially if a project wants to be a Polkadot project, if you want the scalability, security, and interoperability of Polkadot and the Kusama ecosystem, you need a Parachain slot, and the way you get that is by buying up Kusama and staking it, and it is through that staking that you get access to one of these slots that makes you a Polkadot project. And so these Parachain auctions begin in 2 days. In 2 days here, and I want to share with you guys the projects, not based off my intuition, but based off evidence, which projects are the ones that are most likely to first get a Parachain slot, which is extremely bullish for these individual projects, but also Kusama itself. So if you go to parachain.live and if you go to Kusama, we can see that these are the projects that have with the most amount of Kusama to bid so far. These are the projects most likely to first get Parachain slots. And this one, Kurora, is one that I'm actually participating in myself. And yeah, folks, we're going to talk about Cardano. We'll talk about VeChain. We'll talk about some of the dozen things I'm considering buying the dip on here. But first, let's talk about this because it's extremely time sensitive because these auctions start in 2 days and they will definitely, it's a massive inflection point for the Polkadot ecosystem because it's on the scale of like Ethereum scalability or Cardano smart contracts. Parachain auctions are like one of the biggest things for the Polkadot ecosystem. For those who don't know, Kusama is like a fork of Polkadot. They do the same thing, except Kusama is where all the it's basically where everything happens first and then it happens on Polkadot after. So Polkadot and Kusama are basically the same thing, except Kusama is kind of like the prototype and Polkadot is kind of like the car that rolls off the assembly line. Like it's the finish, it's the final product. And so anyways, Kurora, this project I actually participated in myself for these Parachain auctions. For those who don't know, Kurora is kind of well, let me just it's a DeFi hub for the Kusama ecosystem, borrowing, lending, as well as a swap. Think of Aave and Uniswap all rolled up into one. That's what Kurora is. So if you believe in Polkadot and if you believe in DeFi, then something like Kurora has a very good chance of having longevity, staying around over long term, and potentially lots of return on investment potential. So they do not have a circulating coin yet. The way you get Kurora is through these crowd loans. So the way these projects are getting their KSM for these parachains is that they're asking for people to loan their KSM, and in return for loaning your KSM, you get their native cryptocurrency. So I loaned my Kusama out to the Kurora team. The Kurora team will use that Kusama for these Parachain auctions, and it will last, I believe, 330 some odd days, 331, 336 days. So your Kusama gets locked up for 330 days, roughly a year, and then after the lease period, you get your Kusama back. In turn for loaning out your Kusama for basically a year, you get the project's native cryptocurrency. So Kurora is one of the leaders in DeFi on Polkadot, on Kusama, and so I definitely want exposure to this project, and so I have lent out some of my Kusama in order to get some exposure to this project. Now, unfortunately, I'm not able to find the part of the website where they show you how to participate. Yeah, okay, so unfortunately, guys, it's not on this website. If you guys want to find instructions on how to participate, I posted it in our VIP Discord group, guys. In our VIP Discord group, we're posting tons of valuable content there, market updates, what we're buying, what prices, resources. We talk to all our members regularly. So, folks, if you like what we do, you want to support us, you want more of us, more access to ourselves, become a VIP Discord member. You get access through our Patreon. Link for that is down in the description below. So that's really what I want to get across with Kusama, just these Parachain auctions. I'm very interested in Kurora. I participate in Kurora myself. Well, just to tell you guys right off the bat here, there's some exchanges. The easiest way to participate is probably through exchanges. So Kraken, KuCoin, and OKX, those three exchanges are allowing you to participate in these auctions. So if you have Kusama on any one of those exchanges, you can participate in any one of these crowd loans that you'd like. So you do have that option as well. So just to bring it back to the price structure here, Kusama is forming a bit of an ascending pennant, which is actually typically a bit of a bearish indicator. But because we have Parachain auctions starting soon, I'm pretty sure that's why we're seeing a little bit of anticipatory run up. What I am worried with Kusama is typically we experience what's called you buy the rumor and you sell the news. So a lot of the time, when there's a massive catalyst, massive news event, people buy in anticipation for that news event. There's typically a run up leading up to that news event, and after that news event happens, after that catalyst happens, sometimes, not always, there's a sell off afterwards. So I wouldn't be surprised if Kusama kind of pumped and did its thing up until the 15th, and around the 15th, maybe broke down, maybe had a sell off. And again, guys, sell-offs are not the end of the world. The key thing is higher lows. Endless resistance above us, with the market being so precarious, rejections and breakdowns should be anticipated. The key factor is higher lows, because every lower low that we make, that's bearish confirmation, makes it more likely that we can downtrend. But as long as we hold our lows, as long as we keep putting in higher lows, see a low here, low here, low here, low here, as long as we hold above each one of these lows, then we're good. And we could even break down, make a new lower low, but as long as we hold above this, we're good. We could even break down, but as long as we hold above this, we're good. The key thing is macro confirmation, and higher lows are good to see. Lower lows is macro bearish confirmation. So just be aware that there may be a sell-off afterwards, or there may not, because the thing about parachains is that they're not happening all at once. They're being spread out over weeks, if not months. So we may not even see that sell-off. Also, by the way, last live stream, I was having some audio issues. Can you guys hear me okay? If you guys want, maybe just let me know in the comments if I'm coming across okay, if there's like some weird gaps when I'm talking. Just let me know. These last live stream was a little bit weird. It's like I was speaking. I had my gain too low, where it wasn't picking up every word. It sounded like I was talking through a walkie-talkie. So if you guys can provide me a bit of confirmation that you guys can indeed hear me, that way I know to keep going. You sound crystal clear. Okay, perfect. All right, thanks a lot. All right, good to hear. Good to hear. So in the meanwhile, what are you guys saying here? So Kevin, the Joey, is saying, just tuned in. What was the general feeling on BTC? Was this pump going to send us back to the previous highs? Well, it's a bit optimistic. Or likely to go back down to previous resistance and maybe lower. Okay, so to just briefly touch back on Bitcoin, because again, it is relevant. Bitcoin leads the market. We did make a higher high, so we did break the downtrend. We are seeing bullish divergence. We're seeing higher highs and higher lows on RSI. We have a bullish crossover in daily MACD, so we have a convergence of reasons to think that we're getting bullish divergence. We're seeing it in the price structure. We're putting in a higher high and a macro higher low. So ultimately, the one thing that's worrying, well, two things. Number one, the endless resistance above us, constant layers of resistance. Like if I were to draw a resistance zone, this would be the resistance zone. It's like everything above us is resistance. So rejection should be anticipated. The key factor is putting in higher lows here. Also, pumping on weekends is typically no bueno, because we have the CME futures. So it's kind of a fancy trading for fancy people. All right, and these fancy people don't like trading on weekends. So what happens is when we have when we move a lot on weekends, there's a gap. There's a futures gap, a CME gap. What typically happens is price comes back down or price comes up to fill that gap. So the issue about pumping now is that come Monday, we could fall back down and fill that gap, which, by the way, is not the end of the world, in my opinion, because we pump up, come back down and retest. It happens all the time. We break above a level, then come back down and retest it. So even if we do have a correction all the way back down to 36,000, 37,000, it's not the end of the world. We're just retesting. The key thing is higher lows. As long as we put in higher lows, then we're good. So let's take a look at Cardano. I saw someone talking about Cardano, so let's talk about it. Cardano is looking very, very interesting. And as usual, as it's been doing the last couple of weeks, it's been holding up surprisingly well, especially compared to the rest of the market. Cardano is holding up extremely, extremely well. And so my main takeaway with Cardano is simple, because the inflection point, the thing that's most interesting, the thing that you need to look out for to get clarity, is extremely simple, which is holding above these three previous peaks, because these three previous peaks formed a very significant range, a price reactive level, a significant base. Again, for those who've been here the entire live stream, you're troopers, you're the best. These bases are extremely significant. See how we constantly found rejection here? As soon as we broke above, we shot up. But actually, we didn't shoot up immediately. We came back down to retest. We retested previous resistance, flipped it into support, tested it as support, and held it as support, and then shot up. So for me, guys, as long as we hold $150, as long as we hold above these three ranges, we're good. Now, let's say that doesn't hold. I think kind of the last short-term stand for Cardano is $1.30, $1.31. Because if we go to the weekly chart here, we have 1, 2, 3, 4, 5, 6, 7 weeks that reacted off $1.30, $1.31, $1.32. So just above $1.30 is an extremely price reactive zone. So if $1.50 can't hold, if these wicks can't hold, then we're probably going to retest $1.30. And something to be aware of, candle bodies are more significant than wicks. they're typically stronger support and resistance. The body of a candle is typically stronger support or resistance than the wick of a candle. So buck 50 is very important, but I think $1.30 is even maybe more significant. If we broke below and started to hold below $1.30, got a weekly candle holding below $1.30, that's bad. Because when was the last time? Yeah, that's bad. Because see, guys, as soon as we had a weekly candle get above $1.30 in May, we never came back down. All this price structure, all this volatile stuff, yeah, we came back down, but we didn't have a weekly close. We have not had a weekly candle close below $1.30 since May. This is a very, very significant zone. So as long as we can hold this, then we're good. And again, guys, what do we always do? We form a base. We're forming a base here at $1.30, broke back up, came back down to retest it, held it as support, and we're putting in higher lows. This happens all the time on macro scales and micro scales. We form a base, break out, come back down and retest it. If we can hold that as support, then we have more upside potential. And in the short term here, to bring it back to the short term, something we can do here is draw a trend line from all-time highs to the next lower high. And as soon as we see a bit of bullish divergence, then we should probably anticipate a bit of a relief rally, probably to at the very least retest these previous highs here at about $1.80 to about $1.90. So if we can hold above $1.60, $1.80, $1.90 is pretty realistic with Cardano, in my opinion. So, folks, there's over 330 people watching, only 101 likes. You got to smash that like button because we haven't even gotten to the juicy stuff yet, and we want people watching juicy stuff. Because the more likes we get, the more likely YouTube is to share the live stream. And so I do have like probably over a dozen projects here that are on my watch list to buy on this dip. Diversified projects from high market cap to low market cap, from super degen stuff to super safe stuff. A bunch of stuff I want to show you guys. So folks, smash that like button, subscribe. Just click on every link and every button and I'll be happy. So let's take a look here at VeChain. VeChain, I like VeChain a lot. VeChain is an altcoin that I think has long-term staying potential. And so again, with VeChain, I think the inflection point, the thing that we need to look out for to gain macro clarity is very simple. This 200 EMA on the 10-hour, this blue line in this case, this is a very, very historically price reactive zone. We can see here, if we zoom back out, pump dump, held support there, pump dump, held support there, pump, first massive dump, several times held support there. And depending what chart you look at, in this chart, it's not exact, but in some other charts, it's more exactly. This panic sell-off, this flash crash, found support exactly here on some other charts. And even here, we broke below this line, came back down, up, retested it, and found rejection and dumped even further. Even over here, relief rally, found rejection, dumped further. Extremely price reactive EMA. Guys, 200 EMA on the 10-hour. If you want to know what's going on with VeChain, look at the 200 EMA on the 10-hour here. So, for me, it's quite clear. As long as we're below this thing, we're bearish. If we start to get one or two daily candles start to close above this thing, then we can test this red trend line from all-time highs to the next macro lower high. And if we can do something like this, where we break up, come back down, retest it, hold it as support, then we can test this thing. And if we can test this thing, break up, come back down, hold it as support, then we can enter price discovery once again. So wait for that confirmation. The price will tell you what's more and less likely. Fuck your feelings, fuck your intuitions, and fuck mine because they don't matter. The market does what it wants. And so what we need to follow and track to understand what's more and less likely is macro confirmation. Higher highs is confirmation of the bull trend. Lower lows is confirmation of the bear trend. And also, again, Bitcoin leads the market. If we dump, if we swan dive into nothingness below 30K, we're in that case, likelier than not entering an extended bear cycle. But again, even if we're entering a bear market, we still haven't had a relief rally. We still have not retested macro resistance, which again, even when we're entering the bear market, we had relief rallies, and even in the 2019 false bull cycle, we came back up to retest resistance here. So if we do something like this, see, came back up, retested, found rejection. That was confirmation of the downtrend. Back over here, form a trend line. Okay, let me draw this a bit better, a bit more exact. So see, we came back up to retest, got rejected, confirmation of the bear trend. And so if we zoom back to what's happening right now, draw a trend line from all-time highs to next lower high. We still haven't tested it. We still haven't gotten macro confirmation. So guys, if we do something like this, if we come up here and get rejected and like, spend a couple days here, maybe trying to break up and don't, and start to come back down, then the downside potential is quite substantial if we find rejection off that trend line. Because if we find rejection off that trend line, it's going to look an awful like 2019, where we had years of correction consolidation. It's going to look an awful lot like 2017, 2018 when the bear market first started. So again, guys, the macro confirmation of the bull or bear cycle will be had once we test this line. Even in a bear market, even entering a bear market, we have relief rallies, we retest resistance. We haven't done that yet, and so I would anticipate that we test it. And again, guys, we could find rejection. That's totally possible. Again, the key thing is just higher lows, because if we do something like this, come back, find rejection. If we come back down and just put in a higher low, then we can come back up to retest and maybe break out then. So rejection at any point is not the end of the world. It should be anticipated. The key factor is higher lows, because a lower low after rejection is bearish confirmation, and that's very no bueno. That's what we don't want to see. So folks, that's pretty much most what I want to say with that. So why don't we maybe start talking about some of these gems that I'm looking to buy the dip on. So folks, again, if you like this live stream, if you like the sound of all of this, do me a favor and smash that like button. 400 people watching, only 145 likes. Guys, I got an email from YouTube. This is serious. I'm not joking. I'm always serious. I've never once told a lie or joked ever. I don't do that. I'm never sarcastic. So I got this email saying that it's a financial crime. You'll be thrown in YouTube jail if you don't subscribe to this channel. Guys, it's not me telling this. This is an official, totally serious, not sarcastic, not joke. YouTube is locking up people who don't like and subscribe. So, I mean, just saying. All right, guys, enough of my nonsense. Let's talk about some shit that's interesting. So, what do you know? Let's say you are looking to degen out and buy the dip on some stuff, because I've been doing it. It's very risky. We still haven't gotten macro confirmation. But let's say you were in the market to buy some stuff. How do you know what to buy? Well, what I love to do is I like to find what's down. What is down? What is crashing and burning and nobody wants to touch it? That's the shit I want to buy. That's what I want to touch. If no one else wants to touch it, I want to touch it. Because, guys, how do you find above average returns in a market where everyone is financially incentivized to be super smart and know what they're doing? Well, you either have to have above average insight or above average luck. And so one of the things you can do to get that above average insight is find the projects with the most solid fundamentals that are down the most. And so I came to this website, CoinCodex, and I looked at the monthly and I looked at the 3-month chart, and I tried to find which projects are the most down that I like. And so I found roughly a dozen projects that were down the most based off a 1 month and 3 month time frame. And so I ranked them from highest cap, from safest to lowest cap, and most risky and most unproven. So number one, in terms of the projects that I think is most safe but still down a shit ton, is Chainlink. Guys, Chainlink is necessary. What is Chainlink? Chainlink is an oracle. It's basically a thing that provides more information to other things. All right, and this is necessary because for things to grow, things need more information, and Chainlink is the thing that gives the things more stuff. And so that's why Chainlink is important and likely to do well over long term. And this is down a shit ton. All-time highs is over $50, and we're currently at $23. Guys, this is down quite substantially here. So let's take a look here at Link. Let's see if we can actually find the chart pretty easily. I just want to measure exactly how much we're currently down from all-time highs. So from all-time highs, let's measure it. Chainlink is down 54%. 54%. Guys, bear market discounts in what could still be a bull market on a project that's essentially necessary for the space to grow. For smart contracts to have more functionality and more use case, they need Oracle. So basically, a bet on Oracle is a bet on the space continuing to have use case and adoption. It's a very easy bet to make. And Chainlink is the leader in the niche, and it's down 54%. It's a blue chip, has staying power. It's going to be here 5 years from now. It's going to be here 10 years from now, at least most likely. Again, nobody knows for sure. I could be wrong. API 3 could come in Who knows? There's dozens of oracles out there. Point being, this is currently the leader in the space, likely to be the leader in the space moving forward. You know, I liken Chainlink to like Coca-Cola. There's tons of sodas out there, but Coca-Cola is the number one, right? Like, you know, Link is like Coca-Cola, Band Protocol is like Pepsi, and then whatever. APY Theory is like 7-Up, and there's a bunch of soda brands, but bottom line, there's a number one, there's a top dog, and that is Chainlink. It's likely to be the case moving forward. So if you're looking for something super, super solid with long-term staying power that's down a shit ton, take a look at Chainlink, not financial advice. Number two, Compound. Guys, DeFi is here to stay. These lending and borrowing protocols where you can earn yield, where you can stake. Guys, this is extremely interesting because Compound here is, again, down a shit ton. I took a look at the projects that I thought had solid fundamentals that were down the most. I took a look at 2,000 of the top altcoins, and I took at what was down the most and what had the most solid fundamentals. And Compound, again, a protocol where you can earn yield. Do I even need to explain why earning yield is here to stay? Why, you know, in a time of inflation, owning a deflationary asset that gives you yield is financially attractive? I mean, come on, guys. Enough said. Any of these major high cap DeFi plays, even Aave, I don't think I have on this list, but is definitely worth taking a look at. Aave is like the blue chip of all blue chips when it comes to DeFi. This thing's down like 50% from all-time highs. Guys, Aave is going to stick around over long term, in my opinion. At least has a solid fighting chance. And it's the leader in the DeFi space. And we're down like 50% from all-time highs. Guys, this thing was at over 600, and we're at just above 300. This thing's down like around 50%. Definitely something worth looking into. Also, you can stake Aave on something like Celsius and earn 5% compounding interest. So definitely take a look at that. Elron, another competitor to Cardano, Polkadot, Zilliqa, Ethereum. I like Elron a lot. I own a bit of Elron. This thing is down quite substantially from all-time highs. So if we kind of look up Elron here and see exactly how much we're down from all-time highs, I bet you it's quite substantial. And so I think you can. I forget what the interest rate is on Elron, but while that's loading here, the graph is another one that's very interesting. The graph is essentially an indexing service. So when developers are developing, they need a service where they can look stuff up. And the graph is that service where you can look stuff up. So a bet on the graph is essentially a bet on the space growing and developers needing information. That's probably a pretty safe bet moving forward. So again, this project is down quite substantially. It was at an all-time high of $2.34. Currently at 69 cents. So, guys, super solid project with long-term staying power that's down a shit ton from all-time highs. Also, this chart of Elron definitely does not make any sense. So that's what's going on with that. Let's see if we can maybe measure GRT. Have a bit more luck with that. We'll see. Let's see what happens. GRT, it takes forever to load. Anyways, moving on, guys. Next one I want to talk about is Anchor Protocol, another DeFi play. Anchor Protocol is native to the Terra Luna ecosystem. It runs on the same blockchain. You can stake your money on this thing and earn 18% APY on stable coins. Stable coins, guys. Inflation numbers just came out recently with the US dollar. So the US dollar is currently losing 5% of its value year over year. That number is probably going to increase moving forward. So while you imagine, instead of losing 5% on your US dollars, you could be earning 18% on Anchor Protocol. Super interesting DeFi play on a super solid blockchain. Terra Luna, another one that's not on this chart on this list that I do like a lot. I've actually been buying the dip on Luna because I didn't have any exposure to this ecosystem, and I've actually been buying this up. So Terra Luna, Anchor Protocol, same ecosystem. I've been buying Anchor as well on this dip. Low-ish market cap, 205 million. Oof! Look at that base of support. Guys, this does not look like the psychology of a market. Pump, dump, we form a base. Come back here to price structure. Pump, dump, we form a base. And again, guys, we always move in these cycles. We pump, dump, form a base, rinse and repeat, rinse and repeat, rinse and repeat. And again, not financial advice, I could be wrong, but this looks like rock bottom prices on a protocol that has long-term staying power. And pays one of the highest ROIs on stablecoins out there. So definitely bullish on the space long term. And guys, as these whales and these institutions bring in their billions and their trillions into this market, they're going to start using some of these DeFi protocols, things like Aave, things like Compound, maybe one day Anchor. This is kind of a lower cap one, a little bit more out there. They're probably going to go to stuff like Aave and Compound first, like the leaders in the space, but eventually that money's going to find its way over to Anchor protocol. Imagine, when imagine if you're the CEO of some company who's sitting on billions and billions of dollars, and you're like, guys, we're losing 5% of our value every year. This money's just sitting here doing nothing. You could, if you were a CEO, wouldn't you want to stick your billions and trillions, or at least a portion of it, and earn yield on your money? Why the fuck would you not? Why would you not make your money earn money? Doesn't make sense. Guys, cryptocurrency and DeFi is the place where money is best treated, and so money eventually flows where it's best treated. And so that's why I think over the long term, these DeFi plays have staying power, and we've not seen all-time highs quite just yet. Alpha Finance is a very interesting trading platform that offers staking and perks based off how much alpha you own. So very interesting play. All-time highs at $2.63, currently at 60 cents, down quite substantially from all-time highs, under 200 million market cap. Guys, this is a kind of a DeFi play with long-term staying power, at least a fighting chance, and it's down super substantially, rock bottom prices, bear market discounts, and what could be a bull market. In short, it could be a bull trap. And guys, look, this is not financial advice. Right after this live stream, every single project I mentioned could crash immediately. The point here is not to just FOMO buy what I mention, but to do your own research. My hope is that if I expose you to some interesting stuff, some of the stuff that I find most interesting, do more research on your own, come up with your own conclusions, your own trading strategy. Don't just copy what I do or just follow into something I mentioned. Do your own research. Do your own goddamn research. Casper Network, I like this thing a lot. I think Casper Network could be the next cycle Solana. So just like how Solana kind of came out of nowhere this cycle, it wasn't really a big player. There was other, smart contract ecosystems that have been around a while, like Zilka. I mean, there's like dozens at this point. But Solana has really showed itself to be a big player in the space. And I think Casper Network has a fighting chance of being a giant player in the blockchain space, perhaps next cycle. And who knows, maybe it could do well this time as well. I just think it's a little early on this thing. I love this pattern, though. It's just consolidating to nothingness. I like this. I like this because nobody understands it, nobody likes it, and everyone's selling it. That is the best time to be buying. When you're investing over the long term, buying when everyone else is selling, nobody understands it, nobody wants to touch it, if it has long-term staying power, is the best time to be looking at shit. And the thing I like about Casper, the thing that sets it apart, is that it's going after institutional and business adoption. So Casper is kind of geared for businesses to create private and permission blockchains. And also, you can create smart contracts using regular coding. So typically, you have to learn a particular coding language to create smart contracts. So like Ethereum, you have to use, Solidity. You have to use Solidity. And same with like Polkadot, you have to use Rust. With all these native cryptocurrency ecosystems, they have native coding languages. But with Casper, it doesn't have a native coding language. You can make smart contracts with existing coding languages out there today. So the whole thing about Casper is that they're geared toward businesses. And if adoption is just starting, if the institutions are just coming in, eventually they're going to start using blockchain more and more, and a protocol that's geared towards that adoption is likely to do well. And so guys, how do you get above average returns? How do you beat the market? You either have to have above average insight or above average luck. And I think Casper, given that the adoption is just starting, the businesses are just starting to get in, a protocol that's geared towards that niche that there's still not a clear leader in. There's still not a clear leader in a smart contract blockchain specifically geared towards business usage. There's no leader in that niche, and I think Casper has a very good fighting chance of being that leader in that niche. And so guys, nobody understands it, nobody wants to touch it, nobody's buying it, and everyone's selling it. That is the best time to be buying. Of course, we could crash further as soon as I finish this live stream. As soon as you buy, it could crash a shit ton. So do your own research. But this is something I've been buying, low market cap, below 150 million, and I think definitely is a long-term solid pick. Hathor, another project that's very interesting over the long term, below 100 million market cap. Give me a second here, folks. All right, I'm back. So Hathor, Hathor is very interesting because, to put it simply, Hathor is going for ease of creation with tokens and smart contracts. The whole point about Hathor is that they're a smart contract blockchain, similar to Ethereum, Cardano, Polkadot, but they're not directly competing with them, because the whole thing about Hathor is that they want to make it ultra simple and easy to make tokens and make smart contracts. So, you know, things like Polkadot, Cardano, Ethereum, they're geared towards super complex, smart contracts with tons and tons of functionality. That's not what Hathor is trying to do. Hathor is trying to make it super easy to make a cryptocurrency. Literally with a couple clicks of a button, you put in your supply, you put in the ticker, and just like that, Hathor wants to make it as easy to make a cryptocurrency as it is to upload to Instagram, as it is to make a Facebook post, as it is to upload to YouTube. That's what Hathor's goal is. And so, guys, if we're on the verge of mass adoption, then tokenization of everyday assets are looking to increase. And so a protocol that makes it ultra easy for the masses and people who aren't developers to create their own tokens, their own supplies with the security and scalability of the Hathor network is a compelling idea. And so I don't think this project has a lot of good marketing, and so it may not pump super hard. Like, guys, in this space, we got to understand, this space is driven by speculation and greed. Doge did 100x not because it has great fundamentals, but because Elon Musk decided to pump it. So we got to understand that what moves in the space is marketing hype, right? And there's not a lot of marketing hype behind Hathor, but who knows? That could change a month from now. That could change a year from now. That could change 5 years from now. Because this project is a project with solid fundamentals. And you want to get in on stuff that's undervalued before people have figured it out. Because once people have figured something out, figure out why something is so great, the money's already been made. Once everyone's found out about Doge and it's pumped 100x, the money's already been made. Folks, if we want to make above average market returns, we need above average insight. We need to get in on stuff early before anybody knows about it. No one's touched, nobody understands it, and nobody's buying it, and everyone's selling it. And these projects, some of these, like Hathor, is one of those projects. Nobody understands it, everyone's selling it, but it has good long-term fundamentals. And so I think eventually the market's likely to wake up and realize the use case with this thing, and it will be properly priced. This is currently, I think, extremely undervalued because nobody understands it. It has great use case, and everybody's selling it. Great time to buy if you're a long-term investor, in my opinion. Julian Payne says Shib is garbage. These meme coins are garbage. They already did insane pumps and they have no fundamentals to fall back on. Who knows if they survive the bear market? They might not. So, guys, another project here, and you guys let me know if you want me to keep going here. These are quite a lot of projects. Super Farm. I'm gonna run through a bunch of these. Super Farm. They're going for NFT utility. Bring utility NFTs, utility to their token, interoperability between different NFT ecosystems. I like this project, Elio Trades project. I'm also just betting on the person because another thing too, whenever you find someone who's a very smart, knowledgeable person who really knows their shit, it's always a massive positive confirmation when it comes to the bet you're making. Like Elio Trades, he's another crypto YouTuber, one of the biggest. I'm sure if you guys watch crypto YouTube, you probably have heard of him. Guy really knows what he's talking about. He's been in this space a lot, really knows a lot about projects, really knows a lot about NFTs. And so this is a bet on him succeeding because he's very knowledgeable, been in this space forever. And so I like the idea, I like the project, and so I think he has a fighting chance of being a leader in the NFT space moving forward. And guys, NFTs are here to stay. And I really like these NFT plays right now because they have crashed into nothingness. Guys, nobody wants to touch these NFTs. Everyone's selling them. Nobody understands them. And that is the best time to buy them because they have long-term potential. Look at this. Look at this, folks. This is down 86% from all-time highs. 86%. That is a bear market crash. The worst of what's possible already goddamn happened. So who gives a shit if it falls another 10%? The worst of what's possible already happened. And so this is a solid project with long-term staying power that's already corrected 86% from all-time highs. What more do I need to say? Fuck the short term. Guys, fuck the short term. The short term when investing, especially in cryptocurrency, because it's so volatile, brings the greatest risk and the least reward. So why would you have a short-term outlook? If you want to have a short-term outlook, go trade stocks. Go make your 5% a year. The reason why we're in crypto is because we understand of the vast return on investment potential. But we also need to understand that the people who have been the most successful are the people with the longest term outlook. Because in the short term, shit's super volatile. But if you're in quality projects over the long term, eventually the market is going to price them correctly. You want to get in on something when nobody understands it, everyone's selling it, because if you have the above average insight to understand its potential, then you're going to have the above average market gains. And so, again, this project, long-term staying potential, and a niche that's just getting going, that's already corrected a lot, I think looks very attractive. And guys, we could correct further. We could correct a lot further. After this live stream, we could dump to 30 cents. So this is not financial advice. Do your own research. Dollar cost average. Don't blow your load all at once. Wait, be patient, buy the dip, and hodl over long term. Guys, this is a long-term, investment strategy. Crypto's not a get-rich-quick scheme. A couple of people do it when they're super lucky, when they got in the bear market. In the bull market, you got to have a long-term outlook. Anytime you got to have a long-term outlook. The people who are the most successful in crypto are the people with the longest-term outlook holding quality projects. So that's going to be super fun. Moving on here. There's another one I want to talk about, which is Saffron Finance, which this one's a bit difficult to understand. It's doing yield farming aggregation. So they essentially aggregate yield for liquidity providing. Anyways, it's a DeFi play that aggregates yield. That's the simplest way I can describe this thing. And so the developers, I do believe, are anonymous, so that is a con that is very risky whenever there's an anonymous team. But I've been hearing interesting things about this. Low market cap, 35 million, DeFi is here to stay, and a yield aggregator I think is has long-term staying potential. So, not financial advice. This chart looks like dog shit. It's just nothing but down, and that could continue. But this is definitely something on my watch list. 35 million, very low market cap. Also, Armor Finance. Put it simply, this is a protocol that pays you to buy insurance. If you buy insurance, it's pay as you go. They'll scan your MetaMask, they'll scan your wallet, and they'll tell you what you can insure, and then you pay it literally by the second. It's pay as you go, and then they pay you when you buy Armor. When you buy insurance in Ethereum, they pay you in Armor. And so for me, the thing with these insurance plays is as the bull run continues, as people make more and more money, as the institutions come in, these insurance plays are going to look more and more attractive. So a bet on Armor, a bet on crypto insurance is essentially a bet that more people will make more money and more money will come into this space. That is a bet I'm willing to make. And so as more people make more money and more money comes into the space, insurance is going to look more and more and more attractive. So that's a bet I'm willing to make. This thing's down a shit ton for multi-mize. Low market cap. If we look up the chart here, let's see if we can find the chart real quick. Armor, this thing has crashed quite a lot. Armor, go back to the chart. Yeah, guys. Oof, I love this. I love this. Look at this. 83%. 83% for multi-mize. We're also sitting on support right now. We are right now sitting on support. If we draw a trend line from these wicks, this wick, extend it. We're sitting on support right as we goddamn speak. I think I'm going to buy more right now. The fees on Uniswap are like $8. It's nothing. I think I want to buy more right now. Let's see. You know what? I'll wait till after the live stream. I'll think about it. I think I want to buy more, to be honest. We're sitting right on support, low market cap. We'll see. 83% down for multi-mize. Yeah, I don't know. We'll see. I'm definitely tempted to buy this thing. But we'll see. Moving on here. Umbrella Network. Simply put, this is an Oracle, 15 million market cap. I saw the Martini guy talk about this today, and and that's why this thing pumped. As soon as he put out his video, there's an immediate pump. So guys, the Umbrella Network, this is just an Oracle project that has a super low market cap. So with this low market cap, any kind of greed coming back into the market, if Bitcoin gets above this trend line, then this low cap Oracle play could probably pump. So what I would say with this is just wait for a pullback. I wouldn't want to chase a pump. Wait for this thing to pull back. If this thing goes back to 22 cents, 22.5 cents, I'll probably look a lot more attractive than where it is now at 26 cents. So that is what I would say with that. Moving on here, guys. If you've been watching the channel, then you already know what I have to say about this. I have been non-stop shilling and singing the praises of Decenter. Decenter, 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 Decenter. What is Decenter? Decenter is a low cap competitor to Basic Attention Token. They're releasing a browser, and they'll pay you in their native cryptocurrency for using their browser. You get discounts in their marketplace for using their browser. So, guys, look, Basic Attention Token has basically proven the potential of this niche, and Decenter is a low cap competitor to Basic Attention Token, with better tokenomics, lower supply, vastly lower market cap, 9 million mark. Guys, this is nothing. This is nothing. If someone buys $10,000 worth, it'll spike like crazy. This is nothing. This is super, super, super low, and I might just buy some more, like right now, because guys, that market cap is so stupidly low. This thing is so stupidly undervalued. I have been buying the dip on every single dip this thing has had. And so again, guys, this is super, super, super risky. Until Bitcoin gets above this goddamn red trend line, all this potential buying is ultra, ultra risky. So just understand that if you buy anything right now, you are totally degenning out. Super, super high risk, but high reward, not financial advice. We could be wrong, guys. We could enter a bear market. It's totally, totally possible. Because like, think about it this way too. What if Biden comes out tomorrow and says Bitcoin's legal, right? That would probably crash the market. So just understand, guys, it's super high risk. Nothing's a guarantee in the space, but I really, really like this project. Bear market discounts in what could still be a bull market, down 80% from all-time highs. Oof, oof, guys. Oof, this is a screaming buy. Such a low goddamn market cap. I think I might even just buy some more right after this live stream, if I'm being honest. Yeah, I might, because the fees on Uniswap are nothing. It's like $8, $10. I literally might buy some more after this. That market cap is so stupidly low. Any kind of greed, any kind of money comes back into this market, and this thing's gonna fly. Not financial advice. Another insurance play, UNN, Union Protocol. Now this is the governance token. Another thing too, guys, when buying a crypto, you want to make sure that the crypto you're buying actually has some utility behind it. Because sometimes projects just put out like a governance token, which essentially gives you like voting rights on the protocol and like the direction of the protocol. But if it doesn't have staking, if it's not deflationary, if you don't have some reason to hold it, typically doesn't do well. So Union Protocol is just an insurance play that I think is interesting. But I honestly would want to look more into this and understand what, if any, kind of utility their token has. If it's just a governance token, then maybe this is near the back of my list. I honestly am not aware. I just want to bring this, guys, to your attention as a potential competitor to Armor Finance, another insurance protocol that I like. So that's what's going on with that. Moving on to the last and maybe least, who knows, is Nord Finance. Nord. This thing is essentially, a DeFi lending and borrowing and saving protocol that's supposed to be blockchain interoperable. So, interesting thing, okay, just kind of regular run-of-the-mill DeFi, but it's interoperable. Savings, lending, borrowing, okay, there's 1,000 projects out there, but the thing about this one is that they're trying to be interoperable. Okay, that's an interesting concept. Interoperable DeFi gives you, DeFi access to different blockchain ecosystems. It's kind of like a bridge. Interesting idea. All right, so I'll give it a chance, guys. 7 million market cap. This is nothing. Absolutely nothing. Any kind of money could move. If you put $5,000 into this thing, it would probably, like, visually, you could probably have like a green candle. Like your buy order, like you could probably see a green candle. Like, wouldn't it be funny if I placed a buy order and like we saw a green candle? Couldn't go up here. There's like no money in this thing. Let's look at take a look at the liquidity. What's the liquidity? Trading volume? $180,000. 24-hour trading volume. Yeah. This is super, super thin, guys. This is like nothing. Super low trading volume. Super low market cap, guys. This is like a couple $100 of buying and selling at any given moment. Any kind of money comes into this ecosystem, comes in this project, this thing's going to fly. Not financial advice, because while this thing has plenty of upside potential, it's also extremely unproven. This thing might not ever succeed. It could just go on to collapse in nothingness and never recover. It could go from $3.50 to $2 to $1.50. It could keep falling and falling and falling forever. There's no guarantee that it'll go back up. No guarantee that it'll succeed. But if it does, this thing's going to blow the fuck up. It's going to moon. So, again, guys, none of this is financial advice. Just the whole point of doing this is just to show you guys what I think, what's on my radar, some of the things I'm considering. Again, do your own research, come to your own conclusions. But I think all these projects are definitely worthwhile. Down 83%. We could always correct further. This price structure looks dog shit. You're fully knife catching here. There's no signs of reversal. There's no higher highs. There's no lower lows. There's no breaking of resistance. This chart looks bad. We could continue to fall a lot further here. The point of these is long-term investing, and kind of, the short-term price structure doesn't matter too much when you're trying to hold for the next 3 months, 6 months, year or longer. So guys, those are the projects on my live stream here. So I've been ranting for quite a long time here, guys. If you enjoy my rants, smash that like button. Let's see what you guys are saying here. Do you guys have anything you want me to take a look at? Because that's pretty much all I want to get off my chest here. So let's see. Wild Tao says, is that where you buy these smaller coins? Uniswap, yeah. If you guys want to know, again, not financial advice, don't FOMO, do your own research. But if you want to know where to buy something, just go to CoinGecko, look up your project, look up the name, look up the ticker, scroll down here, and it'll tell you everywhere it's trading. Many Bahali says, you guys are dope. You're dope, man. Appreciate that. I'm surprised you didn't talk about ICP. I don't really understand ICP. I tried to understand it. It's very ununderstandable. So yeah, Charlie, I think that's what you're talking about. Someone mentioned Charlie. I think you're talking about Charlie 3. I like Charlie 3. I like this thing. Because this is a oracle, one of the first oracles on the Cardano ecosystem. So guys, these niches that are necessary, DeFi, NFTs, swaps, oracles, in each of the major ecosystems are likely to do extremely well. And so with smart contracts coming to Cardano in maybe August or September, sound like Charlie 3, which is one of the first oracles of the Cardano ecosystem is likely to do very well. So again, guys, I don't know about nobody gets it. People do get it, just nobody wants to buy. There's just constant sellers in the market right now. People are spooked, guys. The market, these alts are not going to go back up until the market gets greedy again. Because while the market's fearful, there's no money in these alts because it's all driven by speculation. These alts will only start to go up once the market gets greedy again. And once the market gets ultra greedy, that's the time to sell. Guys, not financial advice, but historically speaking, the best times to be buying is when the market's the most fearful, and historically, best times to be selling is when the market was most greedy. So literally, you could use this as like a trading strategy where you just buy when shit's fearful and you sell when shit's greedy, and that's how you can time the market. It's at least one of the factors that I'm using to kind of get a confluence of reasons in confirmation of the trend. So these small caps won't pump until the market gets greedy. So just understand, if you buy something now, it could crash as soon as you buy it. The day after, as soon as they end this live stream, they could just crash into nothingness. So just understand that. Let's see here. Niscoti says, do you have any tutorials on how to buy, transfer, and hold these altcoins that aren't available on popular exchanges? I unfortunately don't have any exchanges, any tutorials. Guys, it's late. I've been ranting for... oh my god, it's like an hour and a half at this point. No, man, sorry, I don't. MetaMask, check out MetaMask. MetaMask tutorials. MetaMask is your friend. Check that out. Also, check out our Discord group. We have plenty of resources there. Yeah, so that's going on with that. So I gotta stop saying so much, Jesus. So Ash Kapoor says, what are your thoughts on Luna long term? I love it. I've been buying Luna. It's down a shit ton. I like it. I own it. That's what's going on with that. What do you think about Ethereum 2.0 pools on the exchanges? Look, it's fine. Ethereum. So you're basically asking me, what do you think about Ethereum staking, specifically for Ethereum 2.0? Look, the greatest risk is, what if the exchange gets hacked, right? What if the exchange, some engineer just like steals the crypto and runs away to Thailand, fakes his death, right? So like, there's always some potential risk whenever you're holding your crypto on a centralized entity where they have controls over your private keys. There's always some risk. Not your keys, not your crypto. If you don't hold the keys to your crypto, it's technically not your crypto. So there's always a risk Holding your crypto on exchanges, great risk. What if the exchange gets hacked? What if some engineer runs away with the crypto and just lives on a beach for the rest of his days, right? So there's always risk for these exchanges. And so if you're okay with that risk, then great, go ahead. Also, just understand that these staking for Ethereum is you typically have to lock it up. So you usually can't withdraw. Like, you have to wait like a year or something before you withdraw. So just understand there's lockup periods and there's risk to holding your crypto on exchange. But if you're cool with it, then yeah, man, earn that yield. Theta Fuel popped up again. What is a liquidity pool? A liquidity pool? Okay, thank you for asking. So, guys, when we're talking about things like Uniswap is a automatic market maker, meaning there's no order book. So, okay, how do I explain this more simply? So, when it comes to centralized exchanges, the way they buy and sell things is that they have a bunch of orders, buy and sell orders on what's called an order book. So they have a list of all the sells and a list of all the buys, and they try to match them up. Something like Uniswap, the way they fulfill orders, the way they fulfill buy and sell orders is through liquidity pools, where people provide liquidity, they provide crypto, they loan out their crypto in this pool, and in return, they get paid an interest rate. And that pool is used to fulfill orders. So whenever you're buying something on Uniswap, it's being fulfilled by one of these liquidity pools. And so people put their money in these pools because they get paid a yield. So that is what a liquidity pool is. It's basically you're loaning out your crypto to fulfill trades on a decentralized exchange, and in return you get paid an interest rate. Although it's very risky because there's this thing called impermanent loss, which essentially means the way these pools work is that they try and maintain a 50-50 ratio of each pair. So also another thing about liquidity providing is that you don't do it. Give me a second here, folks. I'm back. So you don't do it with just one token. You have to be a liquidity provider, an LP with like Ethereum, Bitcoin, with a pair of coins. You can't just do it with one coin, or like Uniswap US dollar, Uniswap ETH. That's how you become a liquidity provider. And so the issue with being a liquidity provider is when one of the assets overperforms the other one and you withdraw, you get less of the overperforming asset back because the pool's always trying to maintain a 50-50 ratio. And guys, look, I'm not an expert on this stuff. Ultimately, just what you need to know, the greatest risk factor with becoming a liquidity provider is impermanent loss. And without like delving super into the nuance, impermanent loss just means that whatever pair you provide liquidity for, whatever outperforms the other, you will get less of the outperforming asset back when you withdraw. That's why there's such high interest rates for a lot of these liquidity pools. Like often you'll see like 60, 100, 500%. You'll be like, whoa, 500%? Why is this so high? Well, the reason why it's so high is because the risk is so high. Because with the lower the market cap you go, the higher the APY, but the more volatile the coin. And so if you become a liquidity provider and you withdraw your coins the next day, well, if one of those coins did 100x and the other one stayed stable, you're gonna get a shit ton of the overperforming asset. You're gonna get a lot less of the overperforming asset back. So that's what that is. Thank you for your question. Aloha Accountability says mahalo plenty. Aloha from Hawaii. What up, man? Thank you for the good vibes. I want to visit Hawaii one day. I've never been. It's from what I see, it's beautiful. Where do you yield then? Says Wild Tao. Well, Wild Tao, you can yield in many places. So, guys, look, for the newer people, if you're a newer person trying to get yield in interest and stake, easiest way to do it is Celsius Network, guys. Celsius Network. This is a centralized private company, and it is a cryptocurrency as well, where you can stake your cryptocurrency and earn between 5, 10, 15%. So see, you can take a look here at let's see. All right, let's just say you plop your UST here. You can earn 8.8% on your stable coins, which is pretty substantial. So again, I for newer people, again, if you're asking me where to stake, you're probably a newer person, so I would definitely recommend something like Celsius, something like BlockFi. Though that's literally what I would recommend. If you're trying to earn interest on your crypto, Celsius is my number one go-to pick for whenever people ask me that question. So definitely check out Celsius. So a few things about Celsius too. They pay out the interest weekly, so it's compounding. So it's not just 8.83%. They pay out that interest, but if you just leave it there, it's going to compound and compound and compound. So you could leave like $10,000 there, and that weekly interest will just constantly get compounded. Yeah. So BlockFi is another one. BlockFi and Celsius, they do the same thing. I personally like Celsius a little bit better, but honestly, it's the same shit at the end of the day. Sign up with both. Sign up with both. There's no way to stick to just one, right? So honestly, that would probably be even better if you guys are looking for someone to stake. What if like Celsius shuts down and BlockFi doesn't, right? So you could even put like 50-50, like put your money in both. There's no reason you have to choose one, right? Because if one exchange gets hacked or shut down, then you have another one. Can you unstake? Yeah, no, 100%. So here's what you guys got to know about staking. Sometimes when you stake, you have to lock up your crypto. So with crypto.com is another exchange that offers staking. The only thing with them is that they have lockup periods. So when you go to stake your crypto and earn that interest, you have to lock it up for a month. You have to lock it up for 3 months, and you can't withdraw for that time period. But with something like Celsius, there's no lockup periods currently. So you can deposit your crypto and withdraw it the next day. Although, something to understand with Celsius is that when you go to withdraw, you have to add a withdraw address. And so when you add a withdraw address for the first time, there's a 24-hour like cool off period. So that's like the only thing with Celsius is that for the first time when you're going to withdraw, you have to wait 24 hours. But after that, there's no lockup period. So Celsius is great because you earn compounding interest and there's no lockup period. Honestly, Celsius is my number one go-to. That's what I use. And specifically with Celsius, you can earn like really, really high interest on Matic. Like you can earn 10.5% on Matic year over year. It's paid out weekly and it's compounding. But the thing about Celsius too is that if you earn the CEL token, if you hold CEL, Celsius Network, their native cryptocurrency is CEL. If you own it and if you have it in the exchange, you actually get paid a higher interest. You can get paid all the way up to 15%, depending on how much Celsius you have. So holding Celsius gives you more access to higher interest rates. I want to see if we can actually find. Yeah, here it shows you right here. So if 25 to 100% of what you're holding on the app is Celsius, then you get 25% rewards bonus. And by the way, you can actually take out loans. I've done this. You can take out loans against your crypto using Celsius, and the interest is nothing, guys. I took out I don't want to see the number, but I took out a bunch of loans using Celsius just to see how it was doing, how it works, and the interest rate is nothing. It was like tens of cents for years and years. For like a 3-year long loan, it was like a couple bucks, I think, in interest, nothing. So I really like Celsius. You can stake, you can borrow against your crypto, and if you earn Celsius, you can even get higher reward rates. And also, Celsius has been holding up extremely well during this correction. I think Celsius is even up. Like if we look at the price action here, Celsius put in a new all-time high. While everything is crashing and burning, Celsius is putting a new goddamn all-time high. This project is holding up well because it has super solid fundamentals. Super solid project. High yield, no lockup periods. Great user interface. I honestly, like we have BlockFi. We have a link to join BlockFi in our description, and we don't for Celsius. But I recommend Celsius over BlockFi. I really like this thing. And their token has been holding up surprisingly well. So their token is definitely something worth looking into. I don't think it's going to like do crazy well because it's already pumped so much. But, I mean, it's a super solid project and a super solid staking platform. So those are my thoughts with that. Guys, look, it's late here on my end. I've been going on for an hour and a half. Those are pretty much all my thoughts here. Let's look back on Bitcoin before we wrap things up. Again, we broke out bullishly. It is a weekend. We could come back down to retest the breakout point. That's fine. As long as we hold this as support, we can keep going. Because if we kind of zoom into the price action here, looking at the daily, we can see how the daily was constantly forming a base. Again, for those of you who've been sticking around the whole live stream, you guys are troopers. A base right here. You can see all these daily candle bodies reacting off the exact same zone. 1, 2, 3, 4. Let's extend this a bit more. 5, 6, 7, 8 days reacting off the zone. As soon as we broke above it, we shot up. So we put in a higher high. It's good to see. And we have macro low. So ultimately, guys, a lower low below 30K is extremely no bueno. It makes the likelihood of an extended bear market much more likely. A higher high above this trend line makes it likely that the bull trend can continue. If we break above this trend line here, come back down to retest, hold it as support, then the bull trend could continue. So a retest of this thing is what I'm looking out for bull market confirmation. A lower low below 30,000 would be bear market confirmation. And so that's what I'm looking out for with Bitcoin. Folks, thank you all so much for watching. Do not forget to like, subscribe, comment, share. Hit that bell icon to be notified of new uploads. As well, if you like us, you like what we do, and if you want more access to ourselves, the stuff we're buying, what, where, why, and who, staking opportunities, become a VIP Discord member. You get access through our Patreon. Link for that is down in the description below. And guys, look, I'm gonna talk to Messin tomorrow. Me and Messin, we both run this channel. We're gonna sort out solidify the exact changes we want to implement, because we're going to make changes to our VIP disc group, bring even more value than we already are to our members. And so what I want to say with bringing this up is just the people that got in early to our group will greatly benefit from being early. Folks, we're going to be bringing a lot more value to our VIP disc group, talking about maybe doing some I don't want to share details. I want to share details, but I can't. Damn, I was about to share some details. I want to, but I can't just yet until things are finalized. Bottom line is, we're gonna the people who got in early will greatly benefit from being early. So if you've been sitting on the sidelines, I highly recommend you get in before we implement these changes. Enough said with that. Ultimately, guys, bottom line is, thank you all so much for being here. Anytime anything interesting happens, we're going to be talking about it here. So make sure you stay tuned for the next one. And until next time, guys, take care.